Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, Joe Biden drops out of US election and endorses Kamala Harris, as well as that Beijing and Manila strike deal to reduce tensions in South China Sea. And finally, cyber watchdogs warn on phishing scams as IT outage fallout lingers. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure to share around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with Joe Biden and Kamala Harris. Now, Joe Biden has now abandoned his own re-election bid following the growing pressures from his own party and donors. This comes in a somewhat shocking move to all, as he endorses his Vice President Kamala Harris for the election bid, which he is no longer proceeding with. Now, of course, this is somewhat of a surprise, but somewhat not of a surprise at the same time. That's why I said, it's somewhat shocking to all, as ultimately, there's been a great deal of pressure on Joe Biden over the past few weeks and even possibly over the past few months for him to drop out the race for, a younger, more sharp candidate to kind of take the lead and push the Democrats forward and give the Democrats a fighting chance against Donald Trump, who is, of course, leading in the polls against Biden. This is something that we've highlighted for what's now 6 months, it does seem like, since those polls really started to come through, where we started to see that the public felt that Donald Trump would handle the economy better. They felt that, they were worse off under Joe Biden than they were with Donald Trump. They ultimately just said that basically they didn't feel like Joe Biden's presidency had been a successful one, and they therefore didn't really trust him in the same way that maybe some of the more MAGA supporters, trust Trump. And therefore, there's been a kind of a great deal of pressure even before, the kind of recent malarkey. Before that, we've seen a great deal of pressure on Joe Biden to drop out. It was when Donald Trump and Joe Biden went head-to-head in a debate, I believe on CNN, not too long ago now, that we did start to see, the widespread pressure for Joe Biden to drop out, where we started to see even outrage within the Democratic establishment, with Democratic lawmakers kind of dropping their support for Joe Biden and calling for Joe Biden to stand down and hand over the torch to a younger, sharper, just more on it candidate, which would actually have a fighting chance against Donald Trump. A few names were kind of put out there. Gavin Newsom was, of course, a key one. Not other candidates that, of course, were highlighted back in the 2020 presidential primary for the Democrats, but ultimately certain names were certainly put out there. One of them, of course, being Kamala Harris, which is the VP for Joe Biden. And, this is kind of a controversial politician, even within the Democratic establishment itself. So despite getting rid of Joe Biden, it seems like there could still be problems, facing Kamala Harris, facing the Democratic Party, in actually uniting the party after, of course, this situation of Joe Biden almost being ousted. Now, he did release a Twitter post saying, he felt that he had done all that he could for the country, and that, basically he said that, my record as president has been a successful one, but ultimately it's time now that I hand over the torch to, a different candidate, that being Kamala Harris. Now, why I said that this was a shocking move by Joe Biden, a surprising move to many, was firstly, many assumed actually that Joe Biden, after his fight that he put up against the Democratic establishment, the fight that he did put up against them, ultimately they felt like he was therefore going to stay because he had put in so much effort to basically tell those people to leave him alone and that he's got this, and therefore many are surprised that he's actually backed down on this. Ultimately, we had key Democratic establishment figures such as Nancy Pelosi and key donor figures like George Clooney ultimately removing their support for Joe Biden, and even then Joe Biden was pushing back on that and standing firm and basically saying, I trust in myself to be able to continue this presidential campaign and achieve greatness for 2024 for the Democratic Party, and then go on to run a successful presidency up until 2028. So that was kind of what he was saying, despite key figures within the Democratic establishment pulling out and removing their support for him. But of course now we're facing the reality that Joe Biden has admitted defeat with regards to that pressure, and has ultimately decided to hand over the torch to Kamala Harris. And so now really we're seeing a Kamala Harris versus Donald Trump campaign, which is now about to spark up, it seems like. And of course we've previously spoken, maybe not spoken, but we definitely heard previously from Donald Trump his thoughts on Kamala Harris and his thoughts on what a Kamala Harris versus Donald Trump presidential race would actually fare like. And ultimately he said that he would fare better against Kamala Harris than Joe Biden. So we'll have to wait and see. Definitely keep your eyes on this topic though, as this is a very important one which is affecting markets, just simply because it's creating it's creating world tensions, because it's creating instability, and also of course it weighs on polls, which affects markets because different political parties want the different economic policies and that kind of thing. Now the president announced the monumental decision on the social media platform X, formerly known as Twitter, rather than engaging in a press conference. This move was apparently not expected despite the pressure, and seemingly took place without much of his allies being aware. The move also sends this year's presidential election race into great turmoil, considering there are only 4 months to go until the election is officially held. Biden previously to this decision had engaged in numerous press conferences with the media, held multiple Democratic rallies, and even debated Donald Trump on key issues. Despite this, he is now stepping down, and it was in fact these public appearances in which Biden lost all of his credibility, not only with the public but with the Democratic Party itself. His disastrous performance in the recent debate with Donald Trump was the last straw for key donors and Democratic establishment figures who saw that he was now no longer fit for office. He has said that he will speak with the country later this week with more detail. So that's the kind of key thing to know, is that we're likely going to see a press conference this week from Joe Biden, as he is facing COVID at the moment. So we are likely to see a press conference from him later this week, which of course will clarify this situation hopefully, and ultimately it'll be interesting to see his perspective on things, as of course he's been fighting to stay in power for the past month or so, and now of course he's stepping down, so it'll be interesting to see his thoughts on that, and that speech will definitely affect the market, so definitely listen out for that and anticipate that. That's all to talk about in this article though. Next article to talk about is to do with Beijing and Manila. Now the Philippines and China have now agreed to a provisional arrangement to allow the resupplying of the Philippines military outpost, which is set out on a disputed South China Sea reef. The specific disputed South China Sea reef has become one of the region's most dangerous flashpoints, according to the Filipino government. Now, of course, this is actually a topic which we've frequently covered on this channel. It's kind of been a recurring topic, as ultimately we've seen these two powers clash greatly over the past year or so. Now, ultimately, this is also a wider part of the tension surrounding the South China Sea, with the likes of Vietnam and, of course, Taiwan being those two key nations also involved in these tensions. And ultimately we've seen certain worries kind of be put out there regarding a potential conflict arising just due to these kind of small skirmishes between such powers. Now ultimately though, with Beijing and Manila, that is really, China and the Philippines, this is really where we've seen the most action so far take place with regards to these skirmishes, these kind of small fights that take place, not on a large scale, of course, but kind of, between individual ships, maybe ramming, boardings of ships, detaining officers on certain ships and crews of certain ships and that kind of thing. But ultimately, we haven't actually seen an escalation. At the same time, though, we've seen key powers around the world, especially the US, warn that this area is a kind of, a flashpoint, basically, for violence. And ultimately, this is an area in which two skirmishes, a skirmish or so, could end up causing a massive regional conflict, which would drag in multiple powers and cost the world a great deal of money, but also, of course, human life and that kind of thing. And therefore, it's kind of in such powers' interest to kind of avoid that conflict and look for a diplomatic solution. And that is seemingly what is now being achieved, as when we've spoken about this topic before, we've spoken about those individual skirmishes. One time, of course, we spoke about, if you can remember, we spoke about on this channel the situation in which one vessel, or a few of the vessels actually, were rammed and then detained for a period of time, and we actually didn't hear anything from the Philippines on this topic. So in some ways it's a very secretive topic, but a very important one to, of course, kind of stay up to date with, as anything could escalate, things could get worse, and therefore things can kind of explode into a bigger thing, quite literally. And seemingly now we are kind of moving towards this provisional agreement, but at the same time you always have to question how likely is this going to stay, how long is this going to stay put, how efficient is it going to be, how much is it actually going to work, and how long is it going to take to kind of produce and implement, as all those questions are very important to ask and understand, as ultimately, should this provisional agreement be put into place, but then individual commanders or individual vessels still ram ships, or even maritime vessels kind of get involved, so civilian maritime vessels get involved. How does the provisional agreement cover that as well? And this is all things that we've seen before and are very likely, so it's always very important to keep on your mind, with diplomats on both sides now having reached a deal to enable the Philippines to resupply missions to a rusting warship on the second Thomas Shoal. This agreement has the hopes of diffusing a more than year-long spiral of violence in China, which China would disrupt the trips of Philippines armed forces to the reef. In one occasion, Chinese vessels rammed Filipino vessels, boarded them, confiscated their weapons, and then used axes to puncture the Philippines' boats. So, a very important topic, of course, to cover there, and one that we kind of will probably come back to within the next few weeks. That's all to talk about on this topic, though. Next to talk about is, of course, the cyber attack, or not cyber attack, pardon me, but the cyber watchdogs, which are talking about potential phishing scams. Now, key global security watchdogs have now raised the alarm over malicious websites claiming to fix the glitches that have occurred following one of the world's biggest IT outages. This is worldwide IT outage continued to cause disruption over the weekend, with the US, UK and Australian cyber defense agencies all having issued separate warnings over the weekend regarding the increased phishing activity which is looking to exploit the incident. The aftershocks of the IT outage continue to be felt across the world in different industries and businesses. The IT outage was triggered by a faulty CrowdStrike software update. Key services such as airlines and healthcare were among those still attempting to deal with the consequences. According to the key cybersecurity agencies, hackers have been trying to leverage the outage in IT services so that they can conduct malicious activity. An estimated $8.5 million Microsoft PCs and services were experiencing problems following the outage, but CrowdStrike have now said that they issued a fix for the defect for the worst affected industries, and they're still working on fixing the issues facing other industries as well. So this, of course, was a massive topic which affected markets last week. Of course, we did not have any weekly or morning market briefings last week because I was away, but ultimately this was a key topic, so I hope that you stayed up to date with it, as this was something that affected key US indices, and is something that we'll kind of come back to when we do go to the charts in just a moment. And talking of the charts, we're now done with the article, so we can move on now to the charts, of course, to begin with the US 30 like always. Now, to begin with, as I just did say, we're starting on the Dow Jones, and we're kind of going back to that not cyber attack, pardon me, the IT outage. That, of course, was a key topic last week, in which we saw, the US indices rising to the upside over the entirety of the start of last week. We saw, on the US 30, price rise from this key liquidity zone all the way to the upside, really shoot to the upside, break above all-time high levels, break above all-time highs, really push into that uncharted territory before, of course, that service outage, that IT services outage, caused a significant sell-off in price, causing price to almost retrace to those previous highs, those previous high levels. It will now be interesting to see whether, because of that disruption, because of that continued disruption, we will now see price continue to sell off to the downside, and therefore we'll see price move all the way back to those previous all-time high levels before utilizing that liquidity to then continue a move to the upside. So definitely keep your eyes on the US 30. That's going to be the key area to keep your eyes on, and so it'll be interesting to see whether the price will make its way down there and then continue higher or not. At the same time, of course, because the IT the IT outage has somewhat been resolved, we could just see price continue to the upside rather than a further retracement. If we draw out a fib, possibly that can help contextualize things, looking at from the kind of technical perspective, as we are currently sitting on that 50% Fibonacci retracement level. So definitely keep your eyes on the US 30. Lots to think about there, and lots to note, but yeah, that's also what last thing though is, of course, that 78.60, which does line up quite clearly with that lower level of liquidity, and that 61.80 lines up with that all-time high level, previous all-time high level for the Dow Jones. So key Fibonacci levels to be interacted with on the US 30. Definitely keep your eyes on all of that. Next to talk about though is the dollar, which is kind of now forming what seems to be an inverse head and shoulders pattern. If we kind of look at this surge to downside, which we experienced the last week that I did morning market briefings before, so the week before last, we saw this surge to downside, this sell off from this key liquidity zone, in which price then bottomed out at this key area of liquidity and support. Then over the course of last week, we saw price return slightly to the upside, react to that 38.20 before selling off to the downside, breaking below this area of support and liquidity, reacting or at least achieving that sell-off and reaching that minus 27.2% Fibonacci extension level, and then moving back again to the upside and breaking above this key liquidity zone, which price was holding above previously and is now back above. And so ultimately we can start to kind of draw out the pattern which is forming, which is we have this leg to the downside forming the shoulder, and then the kind of baseline back where price retraced. Then we broke to the downside, which is forming the head, and now we're back to the upside where we're seemingly touching the base once again, and we could now be forming another shoulder, the kind of right shoulder or the left shoulder if you're kind of looking at it in the correct way. Ultimately, we're seemingly forming the next shoulder in the pattern, in which then we could possibly see price continue to the upside. So definitely keep your eyes on the dollar. Of course, keep your eyes on key data, as that's really what's going to be affecting the dollar this week. Next to talk about is Euro USD, which reacted to that higher level of liquidity that we've been noting for quite some time now, and that did take place to end off last week, or actually really midweek last week, and currently we are sitting around this kind of period of consolidation, which we've seen price sit at previously around the 7th of June, and more recently Monday and Tuesday last week. So definitely keep your eyes on Euro USD. Not too much Eurozone data to really note, high significance economic data from the Eurozone to note this week. but still some very important dollar data, which of course will still be affecting Euro USD. So definitely keep your eyes on that. Next to talk about though is pound yen, which has made some massive moves after of course price broke to the downside over the course of last week. We saw price kind of go from this position in which it was at elevated levels to now breaking to the downside, breaking below this key liquidity zone, and now price is reacting to that area of previous support as an area of resistance. So it'll be interesting to see whether we continue to see a sell-off to the downside, or in fact are we now ready to kind of return back to the upside as we saw back when such price action was taking place, just like what we're seeing here. That was somewhat taking place back in the start of May, end of April of this year as well. So possibly that's something to think about. Next to talk about though is Bitcoin, which is on the rise really, or at least over last week we really saw this swing to the upside, with price now returning to levels near that $70,000 a Bitcoin level. It will be interesting to see whether we can reach that this week with the kind of momentum that we've seen form, and at the same time though we have to question whether retracement is due. So definitely keep your eyes on Bitcoin. Next to talk about is gold, which experienced a massive sell-off last week after a great deal of bullish momentum had entered the market since the 9th of July. So we saw this massive push to the upside over the course of the week before last, and then over the course of last week we saw that continued move to the upside, where price broke above all-time highs and tapped the $2,480 an ounce level, which of course that was the kind of level which I noted as a potential target for gold. From that level we did sell off, and now we've retraced all the way back down to the key level of 2,400. So it'll be interesting to see whether now utilize this area of bullish liquidity to swing back to the upside, or in fact are we going to stay and around these levels for quite some time now. Lastly to talk about though is oil, which is sold off to the downside, sold off from the $86 a Bitcoin dollar a barrel level to end off last week, and is staying around that level to start off the week, it does seem like. Definitely keep your eyes on oil though. Tensions in the Middle East are of course affecting it, and the lack of kind of escalation has seemingly caused oil's price to now drop. But any further escalations will of course return our eyes to oil, which will drive possibly the price higher. So definitely keep that on your mind, and definitely keep your eyes on oil. That's all to talk about on the charts though. Last to talk about is the economic calendar. We're receiving quite a bit of economic data, so we'll go through that as fast as possible. Firstly, we're receiving the German consumer confidence and manufacturing figure, followed by the Bank of Canada's interest rate decision. Followed by that, we're receiving German business climate figure, as well as the US durable goods orders figure. Followed by that, we're receiving the US GDP growth rate figure and the US price index figure. And followed by that, to end off the week, we're receiving the US consumer sentiment figure. That's all to talk about on the economic calendar though. We've got lots in the articles, lots in the charts, and lots in the economic calendar. It'll be a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.